Weak ISM non-manufacturing index hurts the dollar, by www.forexconspiracyreport.com. Although currency traders await the next rate increase by the Fed, that increase might be delayed due to the economy. Bloomberg reports that the dollar drops due to a weakening service sector. A gauge of the dollar dropped by the most in 5 weeks after a report showed America's service industries expanded in August at the weakest pace in 6 years, damping the outlook for higher U.S. interest rates. The U.S. currency fell against most of its major counterparts, including high-yielding peers such as the Australian dollar and South African rand. The Institute for Supply Management's non-manufacturing index slumped to 51.4, the lowest since February 2010 from 55.5 in July, a report from the Tempe, Arizona-based group showed Tuesday. That follows a factory survey from the group earlier this month, which showed manufacturing unexpectedly contracted. As indicators of the U.S. economy weaken, so do chances of an early rate increase by the Fed. In short, a weak ISM non-manufacturing index hurts the dollar. How strong an indicator is the ISM index? Institute for Supply Management. According to the ISM website, ISM research impacts the global economy. The ISM Manufacturing Report on Business is one of the most reliable economic indicators available. Published monthly since 1931, the report includes the Purchasing Managers Index, PMI, developed in 1982 with the U.S. Department of Commerce, which measures new orders, production, employment, and supplier deliveries. The ISM Non-Manufacturing Report on Business debuted in 1998. Just what does the ISM Manufacturing or Non-Manufacturing Index tell us? According to a report from George Washington University, what the ISM tells us about the coming state of the economy. The main value of the ISM survey is in its anticipation of later official data, because it is published significantly earlier than the official data. For both private economic actors and public policy makers, there is value in learning something about the state of the manufacturing sector 2 to 4 weeks before the first official measures are published. ISM Non-Manufacturing Index comes from 4 equal parts of seasonally adjusted business activity, new orders, employment and supplier deliveries. An index number of over 50 indicates growth or expansion, and an index below 50 indicates contraction in the sector. The currently weaker ISM Non-Manufacturing Index is still above 50 at 51.4, but down from July when it was 55.5. The implication is that the service sector of the economy is slowing down and taking the U.S. economy with it. There goes the interest rate increase. The Fed has been ever so cautious in raising interest rates, making it clear that their decision to raise rates each time will be data-driven. Government data that comes in a couple of weeks after the ISM index is what they will be watching, but the Forex market is taking its cue from the ISM index and assuming that the Fed will see weak economic data and forego any current rate increases. Of course, a slightly weaker dollar may help U.S. exports and the economy in general, which will eventually mean a healthier economy and higher rates. The key word is eventually. For more insights and useful information about Forex markets and trading, visit www.forexconspiracyreport.com.